to this evening's panel. Before we get started, I'd like to thank our co-sponsors, which are very numerous indeed. And if Ryan could show the sponsorship slide, we can recognize them for their support of these events. Give Ryan a chance, there we are. We have a wide number of supporters from across the entire campus that have helped make this series of events possible. I'd like to recognize them and acknowledge them in deep appreciation for their support. Now, students are welcome to share their reflections on this series of events and tonight's event through short video reflection submissions. I think, Ryan, if you could put up the next slide, that has the instructions and website for submitting your videos. There's going to be an award of 10 $50 Amazon gift cards selected at random, and the videos will be featured on social media. So check that out. This information is also available on the UCI Humanities Center website. And with that, let's get started. It's my honor to introduce our moderator for this evening, Keeanga-Yamahtta Taylor. She's an assistant professor in the Department of African American Studies at Princeton University and the author of Race for Profit: How Banks and the Real Estate Industry Undermined Black Homeownership, which was longlisted for a National Book Award for Nonfiction in 2020 and was a finalist for the Pulitzer in History. Her book, From #Black Lives Matter to Black Liberation, won the Lannan Cultural Freedom Award for an especially notable book in 2016. She's the editor of How We Get Free: Black Feminism and the Combahee River Collective, which won the Lambda Literary Award for LGBTQ nonfiction in 2018, and is a columnist for The New Yorker. Keeanga, thank you so much for moderating tonight's panel, and I will turn it over to you.
Thank you, Bill. I'm very happy to be here from the East Coast in Philadelphia. And so let's get started. I want to introduce our panelists for this evening, and they are going to speak for roughly 10 minutes each. And then we will have a robust discussion between the panelists, and then open things up as well to those of you who have tuned in to join us tonight. To begin with, we have Peter Hudson. Peter James Hudson is an associate professor of African American Studies and History at UCLA. He is a historian who completed his PhD in the American Studies program at New York University. His research interests are in the history of capitalism, white supremacy, and US imperialism, the intellectual and political economic history of the Caribbean and Black world, and the history of Black radicalism and global anti-imperialism. He is the author of Bankers and Empire: How Wall Street Colonized the Caribbean. Next, we have Mehrsa Baradaran, who is an associate dean and professor of law at the University of California at Irvine. Baradaran is the author of The Color of Money, Black Banks and the Racial Wealth Gap. And if you are on Instagram, you will have seen Ta-Nehisi Coates raving about this book over the last couple of weeks, every opportunity that he gets. She's also author of How the Other Half Banks: Exclusion, Exploitation, and the Threat to Democracy. Her research focuses on financial inclusion, racial inequality, and banking regulation. And then we have Bill Maurer. Bill is the Dean of the School of Social Sciences and Professor of Anthropology at UC Irvine. He is the editor of the 6-volume series, A Cultural History of Money, and the author of How Would You Like to Pay? How Technology is Changing the Future of Money. He has been conducting research on monetary alternatives in the financial technology industry. So with that, we will begin with Peter.
Thank you for the introduction and for the invitation to take part in this project. It's good to be able to kind of digitally break bread with so many smart people who work on banking. So let me get started. The 1619 project begins with a historical provocation and a geographical caveat. On the text of the cover of the New York Times Magazine, the project is inaugurated by the following sentences. In August of 1619, a ship appeared on this horizon near Point Comfort, a coastal port in the British colony of Virginia. It carried more than 20 enslaved Africans who were sold to the colonies. America was not yet America, but this was the moment it began. The provocation is what has upset so many people about the 1619 project. It has created strange political alliances and uneasy historical bedfellows of those who would refuse this writing of US history, a rewriting that locates the origins of the United States in the history of slavery and the arrival of Africans, and of those who, quite simply, hate that this story was inaugurated by a Black woman. But the caveat, America was not yet America, has also drawn a certain criticism, for it suggests an inevitability, a teleology about the formation of these United States, and it suggests, as others have pointed out, a sentiment wherein not only was America destined to become America, but those 20 Africans and their descendants were destined to become African Americans. 400 years later, we can force this narrative into being, but in 1619, it is doubtful that anyone, especially those Africans, saw their arrival as the first sentence of the first chapter of the origin story of the United States. It is this almost messianic historical forward motion that gives rise to the geographical caveat that I mentioned. Thus, while there is no inevitable preordained history of the United States, there is also no inevitable preordained geography of the United States. Put another way, while we have in our minds come to naturalize the current political boundaries of the United States, even though people are already talking about it breaking up after this election, but we can leave that for the discussion. For many decades, the geography of the US was shaped by an expansionist fervor, enabled by, but also redirected and tempered by world historical conjunctures and geopolitical forces outside of the present day boundaries of the United States. But I think this geographical or spatial caveat can be further expanded upon. For the space, the territory of the United States was also shaped by a force that unfortunately receives but short shrift in the 1619 project, the force and history of imperialism in shaping what the United States was to become, but also what it is. Where is the history of certainly domestic settler colonialism, but also of the US territories overseas in this story of national origins and identity, of those colonies, neo-colonies, and protectorates, Puerto Rico, Guam, and Hawaii, but also at different times, Cuba, Haiti, the Dominican Republic, the Philippines, and also those nominally sovereign nations from Canada to Mexico to Argentina that have fallen under the sway of US commercial policy and trade agreements, of dollarization, and often of military intervention and occupation. To speak then of financial legacies, to use the title of this panel, is not only to speak of the domestic legacy of slavery within the domestic organization and history of finance and banking, it is also to understand the capital accumulation reaped by banking institutions through the economy of slavery that would in many cases spur and support US financial and political economic expansion abroad. In other words, the financial legacy of slavery can be found in the history of US imperial banking. And by accounting for the history of both, we both extend the conversation initiated through the 1619 project while offering a certain critique of the story of US identity and origins. Let me talk briefly about three such US imperial banking institutions. Each one of these institutions has origins in the slave economies of the 19th century. Each one has played a major role in the history of what is euphemistically known as the era of dollar diplomacy of the early 20th century, that is, in the history of US imperial expansion in the Caribbean. And today, each one remains among the most important financial institutions in the country. These institutions are Brown Brothers Harriman, JP Morgan Chase, and the Citigroup, all emerged, or we can go back to the Brown Brothers slide, all emerged, thank you, in the mercantile world of the 19th century Atlantic and the bloodwash annals of capitalism and slavery. First, Brown Brothers. Brown Brothers began as Irish linen merchants whose success led them to money lending, especially to the slave owners of the South. The banking business properly began through the establishment of independent merchant banks in Philadelphia, New York, and Liverpool. But the success of their investment activities led them to abandon their mercantile operations. By the 20th century, looking to further expand, they partnered with J.W. Seligman, another private banking house with ties to slavery, to form the Mercantile Bank of the Americas. Largely forgotten today, the Mercantile Bank of the Americas was at one time one of the largest international banking institutions in the United States. Through a period of rapid expansion, it organized branches and affiliated institutions in almost every country in the Caribbean and South America, while controlling outright the National Bank of Nicaragua. Its fall was as spectacular as its rise. The post-World War I drop in commodity prices, especially that of sugar, found the Mercantile Bank of the Americas over-leveraged, and it would collapse, almost bringing Brown Brothers down with it. And its assets were liquidated and absorbed by other banking institutions. But during its brief heyday, it was an important and influential force. Nicaragua was dubbed the Republic of Brown Brothers because of its influence in that country, while bank directors were instrumental in calling for US military intervention in the Central American Republic. Second, J.P. Morgan Chase. The origins of J.P. Morgan Chase are too convoluted to recount here, built as it was through dozens and dozens of mergers over the past century, but it is worth noting that among the predecessor institutions are two Louisiana banks, the Citizens Bank and the Canal Bank. Both institutions were established in the 1830s. Both were deeply involved in the economy of slavery. Between 1830 and 1865, together, they directly owned 1,250 slaves, while the records show that they accepted more than 13,000 slaves as collateral. The Citizens Bank and the Canal Bank merged in 1924. In 1931, the resulting institution was absorbed by the Chase. Significantly, at the time the Chase absorbed the Louisiana institutions, it was not only engaged in the spree of acquisitions as it sought to become the largest bank in the US, attempting to overtake its great rival, the Citibank, but it was also expanding overseas, especially into the Caribbean and Latin America. Like Brown Brothers, it had formed an international bank holding company, this time called the American Foreign Banking Corporation, at the end of the First World War. And like the Mercantile Bank of the Americas, the American Foreign Banking Corporation collapsed with the end of the commodity boom. Later in the decade, the Chase turned away from international branch banking as a means to expansion and turned to sovereign debt financing. In Cuba, especially, they did everything possible to secure the nation's debt, working with Cuban dictator Gerardo Machado, supporting him and funding his repression of the Cuban people. Once Machado was removed from power, the Cuban people decried the odious debt imposed on the country by the bank and sought to renounce it. The Chase remained in Cuba for the next 3 decades, however, an important ally to power. It wasn't until the Cuban Revolution's waves of nationalizations of US industry that it acrimoniously left the country. Third, and finally, Citigroup. Founded in 1812 by a group of wealthy New York merchants, the Citibank, as it was then called, quickly played an important role in the US political economy. Slavery was always a part of its history. Textile importer Isaac Wright, director of the bank from 1825 to 1827 and president from 1827 to 1932, owned a line of clippers, the Blackball shipping line, initiating regular packet service between New York and Liverpool. Southern planter Charles Stillman, father of later bank president James Stillman, used the bank as a depository. Stillman ran cotton around the blockade of the South and made a lucrative business during the last years of the Civil War, supplying Southern cotton to Liverpool and Manchester manufacturers and provisioning the Confederate Army. Moses Taylor, president of the Citibank from 1856 until his death in 1882, extended this connection beyond the United States. As the most prominent sugar broker in New York City, he derived most of his profits from his dealings with Cuban sugar planters and Cuban slavery. By the 20th century, Citi was at the fore of the internationalization of Wall Street, and by 1914, it took a leading role in the establishment of branch banks abroad, especially in the Caribbean and Latin America. Cuba and Cuban sugar was key to its expansion, but it also became entangled with the National Bank of Haiti, eventually taking control of it. And the bank was instrumental in the call for US military intervention and the occupation of Haiti, an occupation that lasted some 19 years from 1915 to 1934 and left thousands of Haitians dead. Now, more can be said about the Citibank's operations in the Caribbean, as well as those other banks. But for the sake of time, I will leave it there. But there are a couple of ideas that I hope this brief, admittedly cursory overview can point us to and help spur some discussion. First, in my opinion, we need to do more work to understand how the legacies of slavery in US financial institutions not only continued domestically, but enabled internationalization. The question of the US, second, we should always ask the question of the ties between racial capitalism and finance capitalism or financial capitalism, or perhaps develop an analytic that allows us to see them as one and the same thing. Third, how does this racial financial capitalism, racial financial capitalist nexus enable us to understand forms of US military violence and the loss of sovereignty of the peoples in the Caribbean and elsewhere in the world? And finally, what questions can we ask of Black identity and of the nature of anti-Blackness if this question is rendered through the nexus and history of US imperialism? Thank you very much for your time. I look forward to the discussion.
Thank you. That was great. Next, we have Mehrsa Baradaran.
Thank you. And I, have two different instincts. One is to, present, but the other is just to hear you all talk, because nobody does better work on the intersection, as Peter said, of capitalism and race as Peter and Keeanga and Bill. So I'm going to try to just share quickly what I came to share, and then really hope that we can have a conversation about this. My initial contribution to the 1619 Project was the ways in which capitalism, specifically certain money forms and the way that we do banking and credit in the United States, is not understandable. It doesn't make sense, but for how it built on slavery and what came after. So I'm actually going to start with the after. And I think that the myths that we tell specifically about markets and credit and money present some of the biggest obstacles to closing the racial wealth gap and toward achieving economic justice. For example, the problem of free market capitalism, be it the Adam Smith promise or the Marxist even critique, is that money doesn't discriminate, that free markets are to offer opportunity to all based on one's skill and ability to produce. Yet history reveals that in fact, markets do discriminate, or alternatively, that the American economy has never borne any resemblance to a free market. For most of our history, Black men and women have been excluded from occupations, schools, neighborhoods, and trades, and their property was not protected by the law. Specifically in each historical moment when wealth is being created, it was created with the subsidization and the credit mechanism of the federal government in tandem with, as Peter eloquently explained, the banks that were essentially the invisible hand of the state and market. So whether through the Homestead Act, FHA mortgage credit, GI Bill, housing finance, as Keeanga's written brilliantly about, Black communities were shut out of land and wealth accumulation. And as Keeanga explained, then were exploited by predatory inclusion. That's her phrasing. Moreover, at certain pivot points in history, specifically during Reconstruction and the Civil Rights era, and this is where I'm going to focus quickly on the Reconstruction era, where Black communities were demanding justice and capital to remedy past injustices, the rhetoric of free market capitalism is used as a weapon. So instead of real reform, the Black community was offered a self-help market of segregated banks and businesses. In other words, leaders upholding the dominance of white market institutions promised that the market would fix the problems that were created by law backed by violence and the imperial arm of the state, as Peter referenced. So quickly, I want to demonstrate that, and I do this more expansively in some of my other work, but insofar as the levers of power were held by whites and the economy was based on racial subordination, markets would perpetually block capital accumulation in the Black community. And that was essentially the point. So starting with, I'm just gonna share the Confederate, starting with Reconstruction. So one of the things about slavery is not just that it's a labor economy. It is not Black labor that is creating wealth. It is also capital in slaves. So slaves are traded. They are used as collateral for further loans and wealth. And that is wealth that is not just in the South and in the slave owners themselves, but that goes north and east to Europe. And at the dawn of emancipation, Black freedmen and women were supposed to transition from being capital, being the basis on which the Southern currency is essentially based, to becoming capitalists. And the Civil War was really a competition, obviously, between the Union troops and the Southerners, but it was also a currency battle. And there were different countries bought the Southern Confederate currency that was slave-backed, and the Northern currency won the war, and won because they were able to have their currency accepted by foreign governments. And freedmen and their abolitionist allies demanded land as a form of reparation and as a punishment for treasonous Confederates. Without land, they reasoned freedom and justice would be meaningless and participation in capitalism would be a farce. Yet President Andrew Johnson vetoed the land grant and the Freedmen's Bill, except one provision, which was a bank, which I'll talk about in a second. And he reasoned, and this is the first time where capitalism is used as a weapon. He reasoned that the freedmen would protect themselves by contract law, and that they would just bargain for fair wages and buy their own land, and that was the right way to do it. So this was either unbelievably naive or incredibly cynical. The Southern economy was nothing like a free market. Whites refused to sell property to Blacks, and Southern legislators, lawyers, and judges drafted laws governing every aspect of Black labor. They restricted Black men and women from skilled trades. Vagrancy laws were prevalent. Wages were capped by law and by cabal between employers. And violations led to convict labor and further exploitative extraction of labor. By the end of the Reconstruction era, most freedmen were left landless, voteless, and with practically every profession barred and blocked, their property not protected by law to the extent that they could buy any. Their only choice was to grow cotton. And of course, that was the point, as a worldwide cotton market was heavily dependent on cheap and abundant cotton from the United States. And in order to have cotton exports, the freedmen had to grow it. For the shadow around which the laws and this exploitative sharecropping system was created was what happened in Haiti. Not just the violence of the revolution, but the fact that once the Haitians got land, they refused to grow sugar as the primary vehicle, because if you have land, you're going to grow some subsistence crops for your family, and you're going to grow the debt crop, just maybe a portion of your land. And that is what there was every reason to believe that Black men and women would also do. Yet, if they did that, the cotton prices would increase, and the exporters would suffer, as would the mills. And so, in order to have cotton exports, the freedmen could not get land, and so that was the actual impetus for not providing land. In the meantime, of course, the federal government was actively providing free land to private railroad expansion and to white men and women through the Homestead Act. So Blacks were denied land not because the government was constrained by laissez-faire economics, but because, as Andrew Johnson explained, America was and should remain a white man's government. And this white man's government had control over capital and land because it had control over lawmaking, and it enforced it through the state's monopoly on violence. So instead of getting land, the freed slaves got a bank in 1865. And Union General Oliver Otis Howard explained that the bank was better anyway because it would teach them about thrift and savings, and freedmen should earn land and not receive it as a gift. The Freedmen's Savings Bank was the only tangible creation of the Freedmen's Bureau, and no bank before or since has resembled the Freedmen's Bank. It was created by Congress, signed into law by Lincoln with a special charter. The Federal Reserve was still decades away. And the bank was immediately successful. It was embraced by the freed slaves because of the money that was advertised essentially as being backed by the federal government. The bills and the notes of the building were covered in government insignia, and they seemed to be backed by the government, which at the time made them much more valuable. So at the time, if you had a JP Morgan Chase $100 note, you would buy it for $100 on the market. Yet if you had a note from some random bank in Michigan, you would discount it because you didn't know if it was going to be available. And so the fact that these notes were had Lincoln's face on it, it seemed to indicate backing by the government. And the mission of the bank, according to the congressional charter, was not to make loans, but to safeguard the deposits of the freed slaves. So it was not to be a commercial bank, but it was supposed to be a glorified piggy bank. And for decades in the South, they disseminated this propaganda that this was the safest place to put your money and to buy land. And the capital grew to what would be about $1.5 billion today, too much for the white managers at the time to resist that big pool of stagnant capital. The bank president was Henry Cook, brother of the infamous Wall Street speculator Jay Cook. He took the deposits, he looted the bank, and he speculated them on personal profit in the railroad bond market, which was the subprime market of the day. Depositors lost about half of their deposits. And the significance of this failure sort of reverberates and lingers in the community for decades. Black leaders and bankers for almost a century repeated the assertion that the bank had caused the Black community to not only distrust white banks, but the federal government and their own banks. W. Du Bois says in Black Reconstruction that not even 10 additional years of slavery could have done so much to throttle the thrift of the freedmen as the mismanagement and the bankruptcy of the Freedmen's Bank chartered by the nation for their special aid. By the time, this is he also, Du Bois talks about how they lost the vote, essentially, that they'd been given the 15th Amendment, and what they got was this bank. And by the time the Freedmen's Bank failed, disenfranchisement of the Black population was complete. The rights written into the 13th, 14th, and 15th Amendments were nullified by legislatures, courts, police power, and the paramilitary violence of the Klan. And in a series of decisions from 1873 to 1898, the Supreme Court weakened what little rights remained and blessed Jim Crow disenfranchisement, outlawed the Civil Rights Act of 1875 as unconstitutional. And as a Chief Justice wrote 20 years after emancipation, while Black men were lynched without due process, and while Jim Crow was the law of the South, that since slavery, it was high time for Black men and women to stand on their own 2 feet and stop being the special favorite of the law. And for the next century, the 14th Amendment came up more to defend corporations against state overreach than it did Black men and women against the hostile arm of the state. The state used its power to uphold property rights for corporations while it deprived them of Black men and women, and showing actually that corporations were their special favorite of the law. So I'll stop there, but to say that this was not the only time that this subversion happened, that capitalism was used as a weapon. It happens again post-civil rights through Nixon's Black capitalism program, as neoliberalism becomes the rhetorical weapon against any demands for justice in the late 60s. So I look forward to the conversation. Thank you.
That's great. Thank you, Mehrsa. Next, we have Bill Maurer.
Thank you. And I also am looking forward to our conversation a little bit. I'm going to be talking about payment. And when I say payment, I mean something very specific. I mean the technologies through which we access money. So for instance, through using cash, using a check, a credit or debit card, or some kind of app or a watch or something. And Ryan, if I could have just my first slide, that would be great. I'm going to start with the current pandemic. And one often overlooked aspect of the racialization of the current pandemic being the politics of payment. That is how people are able to access their own money and the relief funds that they're entitled to from federal, state, and local governments. And you may have seen on the news or just by walking and driving around the long lines at some ATMs when the initial stimulus payments were dispersed on prepaid debit cards. For people without bank accounts, which is up to a quarter of US households, they had to figure out how to get the money off the debit card, and ended up through word of mouth spreading information about the ATM that would charge you the lowest amount of fees and allow you to withdraw the highest amount of money. So you could get your cash out of the ATM using that debit card to then do things like pay your rent. Because again, if you don't have access to a bank account, you're paying all of your bills, you're paying your rent, you're paying medical bills in cash. And for people who live in a cash economy, and again, about a quarter of American households are un or underbanked, if you don't have access to a bank account, then you don't have access to the credit cards and debit cards that allow you to use things like Venmo or PayPal or a delivery app or whatever. And getting cash is absolutely crucial to your survival. And all of our current digital payment methods, essentially, like these ATMs, are expensive gated communities that exact a tithe in the form of fees for the privilege of accessing your money. Now, this has a history. And given this panel, you won't be surprised that it is a history steeped in American racism. Those fees we pay at the ATM and that merchants pay when we use our credit and debit cards go back to a time when the US Federal Reserve forced banks not to assess fees for the clearance of paper checks. When the Fed was first established in most banks, if you brought a check, you would be assessed a fee called interchange, which would diminish the amount that you got in return. And the Fed stamped out that practice over a period of time in the early part of the 20th century. And eliminating those fees on checks was one of the first important achievements of the Fed. It smoothed interstate commerce, but it also represented an extension of federal power over the states in the name of a democratization of payment. The idea being that my check that I deposit or bring to cash at one bank should be the same, I should get the same amount of cash at one bank as any other bank. Bankers and other industry groups responded to the abolition of these fees on checks by creating new payment systems that escaped the Fed's ban on those fees. And those new payment systems are our familiar card networks, beginning with the Diners Club and eventually Visa, MasterCard, Discover, and American Express. And I could go into the history of each one of these, but I want to focus instead on that period of the Fed's getting rid of the interchange fees on checks. And Ryan, if I could have the next slide. Banks that assessed those fees were called non-par banks because they didn't clear checks for their face value. They didn't clear them at par. And what do we see? Here's our map of non-par banking in the 40s when the Fed was just completing, just before the Fed completed the process of eliminating this practice. The majority of non-par banks were in states that were historically members of the Confederacy. Assessing interchange on checks was a way to essentially justify segregation in banking. I'll talk a little bit about those Great Plains northern states in a second, because they're also kind of interesting. It's instructive to hear how people talked about this at the time. Southern bankers, to fight the Fed, established something called the National and State Bankers Protective Association, and fiercely defended non-par banks and went to Congress to argue their case. And I just want to quote one banker's testimony before Congress, so you get a flavor of the kind of rhetoric and argument involved. So here's a Southern banker talking about this Fed project to eliminate these interchange fees on checks. He says, "The country bank needs no eulogy. Its money cleared the forest, made the countryside livable and the city possible. As a rule, its life has been honestly spent with one object in view, and that objective was the preservation of the physical values and the character values of its community. It should not die, for with it will go the last bastion of states' rights, and freedom will shriek from its fall." So, I mean, this is like pretty intense rhetoric for a conversation in Congress about bank fees, right? But think through what was just said here again. For physical values and character values, this is all about whiteness and the whiteness of the community that the Southern banks supported. For states' rights, read, of course, segregation. For long in our country's history, the states' rights rhetoric has been in support of segregation and racial capitalism. Now, when Federal Reserve agents went to try to visit banks to see if they were actually adhering to the new Fed policies eliminating non-par banking, they had to arm themselves, like with weapons, with guns, going bank to bank, and frequently would actually be chased by the vigilantes that had been mentioned already and run out of town. The chairman of that Southern Bankers Association, the National and State Bankers Protective Association, compared them to socialists. Now, on the northern plain states here, similarly situated to the south with respect to monopoly country banks and driven by its agricultural sector, you had a lot of the same racial rhetoric, but also pretty intense anti-Semitic rhetoric. So a local paper opined about this Fed process of eliminating non-par banking, quote, "The Federal Reserve System is the visible hand of the invisible empire, capitalized invisible empire, picking the pockets of the producers of real wealth," unquote. Now, fast forward to today. The debit and credit card networks and the apps that depend on them all now assess various fees for the privilege of separating you from your money. Those fees were the bank's response to the abolition of interchange and non-par banking. Now, I might brush off a 3% fee on a Venmo payment, but that's a lot of money, and those long ATM lines tell a different story from my casual person-to-person payment. Corporate payment providers' business model rests first on those fees, that legacy of non-par banking, and now increasingly second on the harvesting of transactional data. And we could spend a whole other session of the 1619 project here on the legacies of datafication in the account books and insurance policies that Peter mentioned of slavery, as well as the contemporary racial politics of algorithmic governance, whether in policing or in marketing. So during the pandemic, we've heard a lot of rhetoric about how this is the end of cash and cash is dying, even as cash demand is actually way, way up, in part, again, because so many Americans are unbanked. Brett Scott, who's a journalist and a strong critic of corporate efforts to create a cashless future, says that digital payments are a gentrification process. I'd only add to his comment that they have a deep connection to Jim Crow era exclusion of Black people from the financial system, as well as schemes to exact the equivalent of a tithe from them in the form of interchange and other fees, as well as now also personal data. Thanks.
Thank you. Thanks to all of you for these really great presentations. So I guess with these things, the first thing that I would ask is do any of you have a reaction, question, or comments for your co-panelists? Because your talks, obviously overlap, but there's some interesting divergences. So.
I do. Bill, I wonder if you think one of the things I've been toying with is the idea that the FDIC. So there was this pivot point during the New Deal, and obviously that the New Deal was kind of put together by Southern Democrat kind of white supremacists, and also the the good progressive sort of movement in the North. And I wonder if you think and then there's this we could do postal banking, we could do FDIC insurance, and the South really wanted FDIC insurance. I wonder if that you see as a way that payments and the banking system gets kind of in that moment. Is it also
it gets sort of bifurcated?
Yeah. And so I don't know. I often go back to that moment, and I wonder if we had gone the Brandeisian way of like treating banks as public utilities and treating payments as a public utility, which wouldn't have, favored this localism of the FDIC insurance and allowed the Southern bankers to actually just maintain Jim Crow, which is what maybe they wanted. I wonder about that.
It's a great question, because the other thing that these Southern bankers were very caught up in, and this gets to the money debates in the 19th century and coming into the 20th, was that idea of sound money, right? They sort of decried credit money, and many people on the left and right do the same thing today and decry the way that banks can create money out of thin air, so to speak. But they did that from a position of belief that money is a sort of natural law type thing that has value in itself, and that depository institutions reflect that kind of soundness, with the idea that the money had to be backed by bullion and it would be locked up in a vault or something, right? So the whole FDIC scheme is really tilted toward depository institutions, not credit institutions. And if I'm the person with all the money, I want to, in one model, I want to hoard it and hold on to it, as opposed to the more kind of, you said it very well about how like the whole thing has never actually been a free market, right? As opposed to the kind of more free market vision of let there be credit and let's go, which we can also criticize. I think it's a great observation of that bifurcation right at the start.
So I have a question. Before I ask it, I just want to also encourage people who are watching, if you have questions, to use the question and answer box to pose your question. So this past summer, there was quite a bit of discussion about systemic racism. In some ways, it became the phrase of if there's the slogan of defund the police, but almost as a corollary, everyone was discussing systemic racism as something that we need to get rid of. And the most curious thing that I have found about this, especially listening to your presentations, is the decided absence of any discussion of what the system in systemic racism actually is. And so I think each of your talks either specifically invoke racial capitalism or infer racial capitalism. And so I'm wondering, one, if you can discuss what is meant by racial capitalism, because in some ways I think it has become like neoliberalism, which is this thing that everyone mentions, but 10 people mention it and 10 people mean 10 different things when they raise it. So if you could say something about what is meant by racial capitalism and how its invocation or use might change or bring some depth to a discussion about systemic racism.
Should I can
Sure. Whoever.
I mean, I guess for me, the discussion, my understanding of racial capitalism is increasingly emerges out of my reading of South African scholars who started writing on racial capitalism in the 1970s, and they we're using it specifically, and these are people who were obviously affiliated with the anti-apartheid movement, many Pan-Africanists, many people involved in Black consciousness, who were really trying to understand the kind of limits of both traditional liberal and Marxist analysis of race in the South African context. And they understood it following Bernard Magubane that South Africa was what he described as the citadel of racial capitalism in Africa, largely because of its kind of node as the intermediary of international finance capital. I mean, both for the kind of domestic situation of white minority rule in South Africa, but also South Africa as a node for finance capital's expansion into the rest of the continent. And so I think the thing for me to kind of try to abbreviate this and get to the point about the system of systemic racism, the thing that I'm trying to push and work through, and I don't feel I've come to any kind of profound conclusions about this, but we can't understand the system of systemic racism without understanding its international implications. And what I've learned from the South Africans is when they talk about racial capitalism, they also understand the system of imperialism and finance capital as part of it. And unfortunately for me, I feel like a lot of the kind of domestic US invocations of racial capitalism see it as a kind of self-contained continental phenomena that doesn't have that critique of imperialism alongside the critique of that kind of the domestic imbrication of race and class.
That's great.
I kind of want to connect, I'm tempted to connect neoliberalism to racial capitalism here, because the neoliberals also saw the international threat, this anti-colonial threat, linking up with the Black Power movement in America as very much, I think, the impetus for the neoliberal turn in US politics. And by neoliberalism, I mean that conjunction with the state, with the Montpellier Society. And Hayek, I mean, Hayek comes out of Europe and very much is radicalized toward neoliberalism by the South African apartheid struggle and the Pan-African sort of what's happening with Frantz Fanon and the way that Europe all of a sudden, I mean, there's a Sartre intro to the Fanon book, I think in the 1961, where he's like, it's done. we're done with the West. The West is done. It is, the next era will be, the era of these anti-colonial struggles, and Fanon's being translated into Farsi, where the Iranian revolutionaries and the Chinese revolutionaries in Cuba, and here in the Black Power movement. And I think that is so destabilizing to the sort of those who have their hands on empire, that I think that is what leads to the neoliberalism. And when I talk about I don't talk about racial capitalism per se, but I focus on the Black capitalism framework, the literal Black capitalism of the Nixon administration. The other side of the Southern strategy, is law and order, and is Black capitalism. And what he means by that is, again, using capitalism as a weapon here, he's saying, law and order, so heavy arm of the state, and then two demands that you have, for economic justice. He's saying, yes, Black power and Black capitalism. So you will have your businesses and they will be segregated. And it's a way for him to oppose integration and oppose reparations using this very nebulous term of Black capitalism. And the people who call like BS on it is, Andrew Brimmer, who's the first Black Federal Reserve Board governor, who says this is snake oil. Don't buy this because it's not actual capital. So I do think that term, as you said, gets very tricky, and it gets misused, especially when it migrates over to the Nixonian. You see that in opportunity zones. Opportunity zones are very much a Nixonian right outgrowth.
And I just add, and this is something that I got from reading Peter's book, actually, is that racial capitalism sort of names a relation but doesn't specify what that relation is, right? And then and that's actually okay, because it might be a whole bunch of different relations that sometimes come together, sometimes don't. So we can talk about racial capitalism in a historical sense, that you don't get the thing that we call capitalism until after you had all of the periods of experimentation in the Caribbean with various forms of forced labor factory type arrangements on plantations and sugar and blah, blah, blah. So it's a historical relation. You could also think of it as an accidental relation. It just so happened that the interests of these people who were trying to make this thing that became capitalism also align with the interests of these other people who had a sort of, white supremacist colonial kind of agenda for other kinds of reasons, having to do with, white working class agitation in the colonial countries, and a way to kind of deal with all of that. For some of the stuff that I work on, I see it as pretty clearly a sort of relationship of just path dependency, right? The people who are setting interchange rates on our credit cards, I don't think are actively thinking at all about anything having to do with race, much less capitalism, because going back to something Mehrsa said, like what they're doing is not capitalist. They're rate fixing, right? They're doing a whole different kind of thing from a sort of free market. There's no free market in interchange. It's collusion, and when this stuff goes to court, it's always found to be basically antitrust activity. But nevertheless, there's this sort of path dependency where that legacy of nonpar banking in the South kind of fed right into the development of the card industry, which maintained those structures of fees, which then, oh, lo and behold, they happen to have the effect of excluding people. Oh, and it's mostly Black people and other people of color, right? How did that happen? So, it's that kind of thing. And I think it's okay to let it be all of those options, and then to make it the kind of analytical problem for us to specify what relation we mean when we use the term racial capitalism.
Can I just piggyback very quickly off that point? Because I think it's really important, because I feel like we're sometimes asked to almost delimit in a very specific way a definition of what racial capitalism is, and I think, following what Bill's saying, what's more important is how is it used, what does it do, and understanding that in the context of a series of historical conjunctures where that relationship between race and class is never a given. It is always being reworked and remade according to different forces. And again, for me, reading people like Neville Alexander, and others from South Africa, is they're very, very clear about the kind of transformations in the state structure of South Africa, its relationship to the changes in South African industry, to the changes of the international political economy, always reworking and remaking what racial capitalism, how racial capitalism operates, and what it means for South Africans in particular.
So I have a few questions in the queue, but I feel like it would be criminal neglect if I don't ask. And we have about 8 minutes left here, but given the way that all of your work really uses a historical frame to help us understand contemporary issues of inequality, to say the very least about it. What is your opinion about the ongoing discussion about reparations? And that was one of the obvious subtexts of the 1619 projects. I think that's also part of the explanation for the kind of vitriol that is being espoused. But I think particularly in your work, Peter, and Bill, what you have described today, that not only is history a kind of lens to understand the present moment, but you can literally look at the organizations and institutions that were complicit in the colonial arrangements in the Caribbean, in slavery itself. And often we hear as a rejoinder to claims for reparations that, oh, we don't know, and it's too far away, and it's too murky and too confusing, and to figure out both who was involved in the slave trade, let alone who were the actual enslaved people. And so I'm wondering, your responses to those kinds of answers, but also more generally, what are your thoughts on reparations in any order?
I'll jump in again. I say yes to reparations. I think there's a couple of things here. One is I'm inspired by the legacy of the CARICOM reparations committee, the Caribbean Communities Reparations Community, which is drawn on the work of people like Nicholas Draper and Matthew Smith at the University of College London, who have this British's Legacies of British Slave Ownership project, which has done incredible genealogy work into the reparations that were given to the British planter class, and they're able to now kind of trace the dividends on that money throughout British society. And I feel like we in the United States need to do the same work with American institutions. And I'll say very, very quickly, when I was doing some archival research as a graduate student for Bankers and Empire, I had a very brief moment of access to the JP Morgan Chase archives. And I remember some bank executive called the archivist, and I could hear their conversation in the background. And they were asking the archivist to find out who the earliest ancestors of the Chase bank was, so that they could stave off any bad publicity around possible links to slavery. What happened then is in about 2004, they released a document that talked about what I mentioned in my paper with the Canal and Citizens banks and their ties to slavery. They made a big claim about paying reparations to support schools in Louisiana and other things. Within about a year of that information coming out, the document had been scrubbed from the internet, and I don't know if any of those reparations came. So to the point about we don't know, we don't have the records are there. We have to do the work. The banks need to open up their vaults so we can have access to them and pay goddamn reparations. Thank you.
Yes.
I agree. I have a really uncomplicated and there's no like quibbling about this. The question is which remedy theory do we use under any theory of justice? If we're looking at sort of philosophical theories, or just any way that courts calculate damages today. If a company, makes a mistake, there's either unjust enrichment, what did you gain unjustly, or there's, compensation, is how do we make you whole from the thing that we took. Under any way that you want to look at American history, there was not just unjust wealth created, there was also a deprivation that links exactly. I mean, you've made this connection, Keeanga. Keeanga's book, she talks about there are 400 billionaires because there are hundreds of millions of poor. I'm butchering the quote, but they are very directly linked. The fact that you have this that white wealth accumulating is because there has been an extraction. The reason why white properties gain in equity in white neighborhoods is because they are not Black properties, and that segregation affects housing prices to this day. And so to not pay for it is an unjust gain. And that, I think, is sort of destructive to the American soul, whatever it is. And I think we're going to see these radical shifts in politics until we just deal with, as Madison said, America's original sin.
And I just add, I mean, if you do the work, you can trace, right, the history through the documents. If you do the work, you can easily calculate out, even not based on the history, the ongoing return on whiteness, right? You don't even, sorry, Peter, historians, we don't need the historians. We can calculate it now, just based on now, right? And figure it out if we wanted to do it that way. The two things, the first thing that, people will say is, oh, but we can't possibly afford it. The answer to that is we are the sovereign issuer of our own currency. We can afford whatever we want to, right? I mean, we just can. You don't even have to do any huge, redistribution thing, and it probably won't cost as much as people imagine, unfortunately. But there's an argument made about the tax haven economies of the Caribbean that, just paying reparations in the Caribbean is less than the amount of tax revenue lost to the United States and Europe through those tax havens. That's an argument that Jason Sharman makes. But so you can calculate it. The money's there. For me, the huge, big, warning sign thing is, how is it actually going to be dispersed, right? Because we know from other cases of efforts at restorative justice that have involved transfers of money or transfers of particularly title, land title, that the way that it's done often is in a way to immediately give the thing, but then bilk people of it right after you've given them the thing, right? And that's where other solutions have to be brought in as part of it, like some of the stuff that Mehrsa has written about around postal banking or Fed accounts or whatever, to ensure that it's done in a way so that it really is dispersed to the people who deserve it, and that it's not immediate. There's not some sneaky way of taking out bits or making it easy for someone to expropriate it immediately upon it's being given.
I think it's also important to remind the world that the people from N'Cobra to CARICOM to others who are advocating reparations aren't trying to write the script of a Dave Chappelle episode where people are just given truckloads of money to spend at will in this kind of free-for-all. People are very systematic about reparations would mean, and it's a repair for the crimes of the past, but also the continuous crimes of the present. So reparation and that repair comes through protection of voting rights, through expansion of healthcare, through expansion of proper schooling and all these kind of things. And I see Lauren Horner from South Philly down in the comments asking about the kind of spiritual questions of repair. And there has to be that element of it as well. How do you repair the history of the psychological wounds of anti-Blackness that were tied to the levels of economic and physical exploitation?
And I think even with trillions of dollars and closing the racial wealth gap, we cannot make people whole. And I think no matter how much reparations we pay, and all of that is necessary and more, there are going to be deep psychological and just, a physical trauma. I mean, life expectancy rates, all of that stuff has that embedded racial history. And there isn't, when a company does wrongful death, they can pay money, millions and millions of dollars, but you can't make up for the impact of losing someone unjustly. And that is something we'll never get. All the men and women lost to police violence. We'll never get the lynchings and the property theft and the children lost, the mothers. So it's not possible to heal. It is possible to pay damages.
All right, we are at time. I want to thank you guys, Mehrsa Baradaran, Peter Hudson, Bill Maurer. Thank you all for tuning in. Apologies to the folks who submitted questions. We ran out of time. I have a couple of announcements here. There will be a post-event survey that you will receive in the email. I'm sure the organizers would be very happy if you fill that out. You have the last date to complete the census is October 31st. Please do that. The deadline to register to vote online was October 19, but it's still possible to register in person. The organizers will share the links for that. And there's more discussion to be had about this issue. So we encourage you to stick around afterwards. And again, thanks to our speakers for a very important, informative set of presentations tonight. Thank you, guys.
Thank you.
Thank you.